decode that further, we are now joined by Riju Junjunwala, Vice Chairperson, HEG Limited and Managing Director of Bhilwara Energy Limited. Mr. Jhunjhunwala, morning, Ashesha this side. Thanks so much for taking your time out and joining us here on ET Now. And first up, let's talk about the demerger. That's the biggest trigger for this talk, isn't it? Demerger aims to separate two businesses that you're currently operating. One is the core electrode business and the new age businesses that you're now entering into. By when do you expect to receive NCLT approval and what is the status so far?
So thank you for this. And like you said, the demerger is in process right now. It's in the NCLT court of approval, and we are hoping to get all the approvals in place by around August. So by middle of August or by end of August, the new company should be listed by then.
Okay, so that's the timeline? Yes, okay.
Yeah,
so that's the timeline for the listing.
Probably that's the timeline. I mean, depending a week to week by the court, but otherwise they're on track for all the demerger process.
Okay, understood. And once the demerger is effective and you have a newly listed entity, can you help us understand, Mr. Jhunjhunwala, how will the growth roadmap look like and what would the growth levers be that you're aiming for?
So in the new company, we have two clear verticals. I mean, the first vertical is into manufacturing of high technology cell component products, especially anode. The anode graphite powder that is used to manufacture lithium-ion battery cells. We are putting up a large 20,000 tons project for that. Then apart from that, we are putting up the 150-ton project for this product called graphene, which has found a lot of acceptance in a lot of different industries like cement, your concrete, etc. So one side of the business is focusing on very, very high-tech manufacturing of these sectors. The second business side of the portfolio is the green energy sector, in which we have around 300 megawatts of operational hydro projects, all kind of run-of-the-mill projects, run-of-the-river projects. And we are selling in the open market today at very healthy prices. And we have plans to put up a couple of solar projects for some private customers. So clearly the company is one we can see is in different areas, and both have their own separate growth plans going forward.
Okay, I wanted to prune you on HEG Green Tech further. I understand that it has not started contributing financially meaningfully so far, isn't it? What will the timeline look like for revenue ramp up and profitability going forward?
So HEG Green Tech will be profitable from day one because our 300 megawatts of hydropower, which are generating close to around 350 crores of free cash flow every year, that is part of HEG Green Tech. Then we are on top of this, we are putting up a 2,500 crore project for this graphene and the cell component I spoke about, and that will be operational by April 2027. So that year should see 27, 28 should easily see like a 40 to 50% kind of a ramp up from this particular business. And then of course we are putting up a couple of solar projects for private customers, which will also see a ramp up in that particular year. So I think in all fairness, we would be a profitable company, but the numbers of the company will start coming in from the year 28, 29. And by the year 2030, we expect to be at least in like a 4-digit kind of more than a 4-digit this thing EBITDA.
Okay, 4-digit EBITDA over the next few years. But I wanted to understand the rationale before for the demerger. Why did you undertake the demerger right now? You could have probably done it after it turns profitable. And since you're talking about 4-digit EBITDA, perhaps shareholders could have created much more value 4 years hence, isn't it?
No, so the shareholders are creating the same amount of value today because the demerger is the way it's happening is one share of HEG Graphite, which is going to be the graphite company. You'll get one share of the Green Tech also. So as far as the shareholders are concerned, I mean, everyone is getting the reward of this. Plus, the promoters are putting in 49% of their own holding in the hydro company, which is already a kind of 350 crore cash generating company into this thing. The reason for the demerger is simple, that HEG Graphite should be, in the HEG Graphite space, we are a 100,000 tons, which is the single largest manufacturer of in one plant of graphite electrodes. So that product is completely focused on that. And the new company, like I told you, is focused on two particular things, which is the growing anode market, which has a huge potential. I mean, going forward, we're just putting up a small 20,000 tons plant, I believe, and we need to go up to around 60,000 tons in the next 5 years. And in both the companies, I mean, the way we are seeing the power prices going up because of the hydropower sales, the way we are seeing the graphite electrode market now kind of moving after a kind of a lull period. So, I mean, both companies have their own different management, the more different focus. So that's why this whole exercise of demerger was created, so that we can blend the kind of profitability coming from the hydro sector to fuel our growth in this CAM space, the battery component space.
Mr. Jhunjhunwala, also wanted your thoughts on the demerger in terms of capital infusion. You're getting into new businesses, which means you will have some amount of capital expenditure. Now with the demerger in play, how will that capital expenditure be funded, and how will the allocation be between the current company and the new company that will come into existence?
So essentially, HEG, which was funding the anode project, the battery material project, is getting demerged with around 900 crores of cash, which will form the initial equity for the new company business. Then, like I said, like we have a 350 crore cash flow coming in from the hydro company, and another 500 crores of that sitting in the hydro company. So we are, and then we've got our investors also in place who came in last year. So we are sitting on a decent equity sum of around between 2,000 and 2,500 crores over the next 2 years. And if you leverage that, I mean, we've got a good kind of, again, a good number to play with on both these sectors. Because again, like I said, the battery manufacturing space, especially for the anode thing, which is controlled by China today, 95%, and not many Indian players are into it. We see a huge growth opportunity over there. So capital will always be something which will be short for us in terms of our growth plans.
Understood. On that note, Mr. Jhunjhunwala, I wish we could extend the conversation a little longer. So much more to speak about. But on that note, we'll have to end this conversation. Thank you so much for your time today. Okay, viewers.